Economic clarity often emerges from a single, reliable instrument. For decades, the ISM Manufacturing Report has served as one such tool, a barometer of economic activity that distills the health of the U.S. manufacturing sector into actionable insights. Released monthly, this report does not merely track the pulse of manufacturing, it signals the broader trajectory of the economy. Its importance lies in its ability to reflect demand, supply chain efficiency, and overall industrial sentiment, elements that ripple outward to influence policy, investment, and corporate strategy. Manufacturing accounts for approximately 12% of U.S. GDP, a seemingly modest share. However, its influence far exceeds this figure, acting as the connective tissue for sectors such as transportation, energy, and technology. What happens on factory floors often presages shifts in consumption, exports, and employment. The ISM report captures this dynamism through its Purchasing Managers Index, or PMI, a composite metric derived from key factors such as new orders, production, and employment. A PMI above 50 indicates expansion, below 50, contraction. Simple in form yet profound in implication, the PMI is the foundation upon which much economic analysis rests. Manufacturing responds acutely to economic shocks and policy shifts, making it a leading indicator of downturns and recoveries. For instance, during the COVID-19 pandemic, the PMI plunged to record lows before rebounding, signaling the trajectory of the economy long before GDP figures confirmed the trends. Today, the ISM report remains vital for assessing the fragility or resilience of the post-pandemic recovery, as well as the structural challenges facing U.S. industry. This report's breadth is striking. It encapsulates feedback from supply executives across 18 industries, offering granular insights into demand cycles, supplier dynamics, and pricing pressures. When raw materials inventories dwindle, as they often do in periods of heightened demand, it is reflected in the ISM. When companies trim headcounts in response to slowing new orders, the employment index flags this trend. In a world of macroeconomic complexity, this micro-level precision is invaluable. For policymakers, the ISM Manufacturing Report is an indispensable guide. The Federal Reserve, for instance, incorporates PMI data into its decisions on interest rates and monetary policy. A declining PMI often signals weaker demand, justifying rate cuts or liquidity injections. Conversely, sustained PMI growth may embolden the Fed to tighten its stance. The report thus bridges the gap between industrial realities and policy responses. Investors too lean heavily on the ISM. Equity markets are sensitive to manufacturing sentiment, with expansions boosting confidence in cyclical stocks like materials and industrials, while contractions often spark rotations into defensive sectors. Moreover, bond traders monitor the ISM for clues about inflationary pressures. Rising input costs, as highlighted in the prices index, can foreshadow tighter monetary conditions and rising yields. Businesses use the ISM report for operational strategy. Supply chain managers scrutinize the Supplier Deliveries Index to gauge lead times and adjust inventories accordingly. The New Orders Index helps firms anticipate shifts in demand, enabling proactive adjustments to production schedules and staffing. In a volatile environment, such foresight is critical. While the ISM Manufacturing Report offers unparalleled immediacy, it also serves as a prism for understanding larger economic forces. In November 2024, for example, the report highlighted a persistent contraction in the manufacturing sector, with the PMI at 48.4, a sobering reminder of ongoing challenges despite pockets of recovery. Declining backlogs and cautious inventory management reflected businesses' tempered outlook, while slowing supplier deliveries hinted at easing supply chain bottlenecks. This nuanced portrait underscores a central truth. Manufacturing is both a mirror and a magnifier of economic health. When global trade falters or consumer confidence wanes, the effects manifest quickly in the ISM's indices. The report's export and import metrics, for instance, often reveal the first signs of geopolitical or currency-driven shifts in trade flows. The ISM Manufacturing Report remains one of the most reliable indicators of economic momentum. Its value lies not only in its timeliness but also in its transparency and sectoral focus. For those navigating the complexities of policy, investment, or business strategy, the report is an anchor in turbulent seas. At Enki Advisors, we incorporate the ISM into our broader analytical frameworks, such as the Enki Recession Index, ERI, to contextualize its findings within macroeconomic trends. The ISM's ability to distill the real economy into measurable data ensures it will remain a cornerstone of economic analysis for years to come. If you like this video, please hit that like and subscribe button.